We're back now with Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. Gareth is somewhat of an internet celebrity now after calling for Bitcoin to reach $20,000 while it was still at $60,000 and beyond. We'll be talking about Gareth's next price forecasts, as well as what's been happening right now with not only Bitcoin, but stocks and gold. Gareth, welcome back to the show. We're both doing this remotely. The people want us to talk so much that we're willing to both be in a remote location. You're in Oregon, I'm in Toronto, and do this emergency hit. Welcome back to the show.
Thank you. And we got to give the people what they want. No doubt about it.
The people want to know what you think, Gareth, and we're going to change the format up a little bit today. I have a few questions of my own, but mostly I'm just going to read questions from Twitter. I polled the audience earlier this morning. I told people we're going to be speaking, you and I, and a lot of good questions were submitted. So I will read them like it's an interactive interview. But first, before we get to the viewers' questions, let's talk about what happened over the weekend. Bitcoin broke a key psychological level, $20,000. You were calling for that. You said that it may go below $20,000, and it did. So what exactly drove the sell-off, Gareth? Let's start with that, and then you can comment on your next key price targets.
Absolutely. So amazing, right? I mean, we've seen such a collapse from the 65-ish thousand when we were doing that live interview in Dubai, which was just awesome. I still remember I was the loneliest man in the room. No one really wanted to talk to me too much there. I kind of had to stand in the corner because I was the only one that was bearish. But again, price is always king. Charts are always truth versus emotion. And I think we always have to remember that whether you're a bull or a bear, price and price charts are what's going to give you the clearest signal. So we saw the break of 20,000 just this past, really this past weekend. And the key here is to understand why it broke 20,000, because there were a lot of people saying, hey, 20,000 is the low, and by the way, they all came on once we got to like 30, they all piled on the bandwagon. But the bottom line is when you have everyone calling for a low of 20, you have a lot of people putting stops just under 20. And it's the tendency of a market to run those stops, make people freak out, make the weak hands exit, and then you finally get a short-term bottom. And I think that's what we have here on Bitcoin. And again, I want to show you a couple things of why I think it's a bottom. So we're going to turn over to the charts here. And what you can see here is that we had this collapse from about 40,000 down to about 26 or so, 25 and 26. That move down to 14,000, it's about $14,000, was replicated perfectly with a measured move down to about 17,500. So that's a measured move. That gives you a good basis for a low. In addition, if we take a look, we know that the January or the December 2017 high, that was a major level. We have now recaptured it after just piercing it briefly. So we know that's support. And then even one more little tidbit of great technical analysis is that if you take the low from March of 2020, which is the low from COVID, which was the lowest point going back to quite a while on Bitcoin, it was around $4,000. And if you connect it to this recent low and you drag a parallel line up, you get the two highs from last April as well as November. So there's a confluence of technical supports right here that signal to me, at least we have a bounce here, probably to 25 to 30,000 in the cards.
Okay. How long is this bounce going to take? Or how long is it going to take to get to 25K, you think?
So I think it'll be faster. I think as we get and stay above 20,000, a lot more people are going to start to say, hey, we have a major low in Bitcoin. And you're going to see the bulls come back with a vengeance, trying to say, okay, now we're going to start heading back up to all-time highs. I think that'll propel it over the next probably 3 to 6 weeks back to 25 to 30,000, which again, from 17,000 is a low, or 17.5, percentage-wise, that's massive. Now, if you're in from 60 or 65, that doesn't seem such a good bounce. But again, in percentage terms, that's a major, major move. Now, once we get there, unfortunately, I still see more downside. I still think that we will likely head down to probably about 12,000, which is my second price target on the downside.
12,000 is your second price target on the downside. Well, that answered a lot of the viewers' questions already, Gareth, but I want to come back to your upside target for a minute. I'm curious as to why you stopped at 30,000. Why not 100,000 or 150? Why not give a a long-term bull cycle high?
So I think it's important to recognize that I remain a long-term bull on Bitcoin. In fact, when we broke 20,000 at 19, I announced that I started my beginning hodl position. And so ever since we were at 65,000, even though I was bearish, I was always saying, hey, listen, long term, I think there's a huge place in the economy, in the world for Bitcoin. And I think we'll get there. We'll get to 100,000, 500, maybe $1 million. It's just you have to flush out all the weak nonsense. I think last time we talked about that Darwinian concept of only the strongest will survive. And you just have so much crap in the system, frankly, right? So the idea here is that in the near term, a bounce back to 25 or 30. The reason 25 is a key level is that is your low from the Terra Luna collapse. So that is going to be resistance. And then if you go up, there was a ton of consolidation for about a month that occurred just around 30,000. And that is going to be major resistance. So it's hard for me to imagine with the NASDAQ, even though I expect bounces there, I still think the NASDAQ's headed a lot lower, at least to the COVID highs, that the Bitcoin market would bottom just yet fully. So I still think we need to wash out more of the weak-handed Bitcoin, the cryptos, and that will finally give us later this year a big point bottom.
All right. Crypto Crazy asks, where does he see Bitcoin 2 to 3 years out from here?
Yeah, 2 to 3 years out, I think we're back to 65. So I do think there's a decent chance that we're back to 65 within 2 or 3 years. I think this next 6 months or so is going to be the hardest. Then we'll bottom out, and then you'll probably have another 6 months of sideways chop. If we look at past cycles on Bitcoin, it's usually that first year down, and then you get a sideways kind of choppy where the bulls and the bears are just battling it out for a period of time. And then finally you start to get that move up. And I'm still a believer that inflation is going to be a systemic problem, maybe not at 8 or 9%, but at 5%. And I still believe that when the economy really tumbles here, and I'm starting to see the signals of that eventually the Fed will say, okay, we have 5% or 4% inflation, but we have 10% unemployment. We now need to print again, which is going to be another positive for Bitcoin. So again, there longer term, lots of positives for Bitcoin. I don't think it's going away. I don't think it's going to zero ever, but ultimately you just have to weather the storm essentially.
Well, you're assuming that by then, if the Federal Reserve becomes accommodative again, that Bitcoin will still be correlated to macroeconomic forces and be correlated to the stock markets overall. It's possible at some point in Bitcoin's future that it will start trading independent of all other variables and basically be a diversifier asset, right? I mean, it's just possible.
And I do believe that will eventually happen. But the thesis that I have for the Fed being accommodative again is that the economy is going to get so bad that they're forced to, which may not necessarily make for a new massive bull run in stocks. Like I don't think the S&P or the NASDAQ are going to hit new all-time highs for years. I think we could be in a scenario like the NASDAQ was in 2000, where when you finally dumped out, it took about 15 years to make new all-time highs. But I think Bitcoin will get there a lot sooner because it's not an economic play, right? So if the economy is suffering, if you have this systemic kind of bear market longer period, that's bad for stocks. But Bitcoin, because the printing presses will start up again, that would be ultimately a bullish scenario for Bitcoin.
Okay. We're going to come back to that. That was a major bombshell you just dropped. The stock markets aren't going to recover for years, where at least we tested previous highs. We're going to come back to that and talk about the Fed, but I want to finish up on Bitcoin first. Okay, so Gareth, what happened to 100K? Are we retesting 69K? Well, you answered the second part of the question, but yeah, what happened to 100K, Gareth? Are we still reaching that at some point?
Yeah, absolutely. Absolutely. So it may just take a little bit longer. I mean, everyone wanted that instant gratification when we were at 69, everyone was calling for it by the end of November last year. The markets just don't work that way. When everyone's on one side, they're going to flush out everyone and try to get everyone to kind of give up. But eventually the asset makes sense, right? We need it in the world we live in with the money printing, with the Federal Reserve and the central banks and just kind of the inflationary environment. So it is going to 100 and it is going beyond.
Okay, that leads to the next question, actually, is this question from Megu Baskloof. Sorry if I pronounced her Twitter handle incorrectly here, but once BTC bottoms, how long until the next all-time high? What price will that be? A little bit difficult to project that far out, but curious to see your answer.
Super, super difficult. All we can do really is look at past cycles. And now let's be clear. And I think I even saw a comment on the question that you asked on Twitter that got people to ask questions where they were saying, you have to recognize that this is a different environment. Bitcoin has never been through a massive hiking environment with no stimulus coming into the system. So it could take longer, but past cycles have shown us it bottoms after 12 months and with in the next 6 months, so 18 months out, it starts to chop. and then you get that next bullish run between 18 and 24 months. So the idea is, within 2 to 3 years, I think you're likely back a 2 or above the 65, 69,000 level.
Xmersion asks, at what price level could Bitcoin's market cycle be irreversibly damaged, i.e. breaking below 10K? Question mark. You said that 12K is the lowest, so I guess his question is below that. Are we going to see irreversible damage?
Yeah, so the important thing is, based on right now, the next target is 12,000. But I think it's important to recognize that it's very possible we go below 10,000. All right. One thing I've learned in my trading career of stocks and commodities and now crypto is that assets go much further to the upside than anyone thinks and much further to the downside. I would say that you would prefer not to see the lows from 2018 and 19 taken out, which were around 3,500. Aside from that, this new unprecedented environment for crypto, because of the Fed and what they're doing, and they're pulling out money and sucking it out of the system, you have to expect that it could be a very rocky ride. So just to give you a sense of how I'm playing this, I started a HODL position at 19,000, just a small amount. I basically said to myself, what do I want to invest in Bitcoin over the longer term to just buy and hold? And I came up with a number and I divided it in 6 parts. And I took that first sixth amount of money and I bought at 19. And I'm going to basically put a buy level of that amount, 1/6 every 3,000 down. And so I'm looking at even potentially having some still buyable money even below 12,000, because I recognize from my history of trading that it can easily go below my lowest point. So I'm at a dollar cost average now, starting from 19, 16, 13, 10, and so forth, all the way down.
All right, that answers the next question. Have you started accumulating by Dam Siga? So you've answered that. You've already answered this, but somebody had the exact same downside target as you. What is the maximum bottom in TA terms? I say 12K. What does Mr. Soloway say? So I guess you agree with this person named Hong.
Well, one thing, so this is another great point, and we saw this with GameStop, we saw this with AMC when Wall Street Bets kind of did their runs and really bankrupted a couple hedge funds as well, is that in general, when you know that there's big institutional money that's going to be forced and that it's leveraged at certain levels, then the market is just naturally drawn to those levels to put maximum pressure. So, for instance, I had heard that 20 to 21,000 was a key level for Michael Saylor and Market Strategist holding. Now, I'm hearing that they came out and said, no, we can weather the storm lower and so forth, which is fine. But the key is you have to see more kind of big money that's leveraged kind of getting blown up. And you also have to see, again, I'm in the camp that 90 to 95% of all altcoins need to go to zero. And again, for that to happen, it makes a lot of sense that Bitcoin's going to have to go down lower than this, 17,500 level at this point to 12, maybe even below, before you wash out those kind of nonsense junk coins.
I guess this question applies to stocks as well. We can talk about stocks in a bit more detail after this segment, but Sanaullah asks, what is the next target? You've already answered that. Is it the fear that holds people from buying at the moment, or inflation, rate hikes, Ukraine, etc., are still playing their role? In other words, what are the key macro variables holding people back from becoming more risk on right now?
Yeah, so I think honestly, it's all about the Federal Reserve. It's always been about the Federal Reserve. And again, we saw lots of negativity and negative news over the last 5 years. Heck, COVID, look at what happened with COVID and the destruction. And then the Fed came out and printed more money than they'd ever printed ever before, almost combined. And the markets just ripped up to new all-time highs. So I think when it comes to like Bitcoin, Russia doesn't really matter, Ukraine. All these things are secondary versus what the Federal Reserve is doing until we see Bitcoin kind of mature into more of a gold type asset. And again, it is going to do that. But remember, and I always say this now, is that Bitcoin is a 13-year-old, right? Started in 2009. Here we are in 2022. That's 13. You can't expect it to behave like gold, which is what everyone said ahead of time. Oh, it's a kind of a protection against the printing of money and all these things. 13-year-olds act erratically. It's a new asset. It's not mature like gold. Gold's been used for thousands and thousands and thousands of years. It will get there, but it's going to be a wild ride until it gets there.
Okay. 2 more questions on Bitcoin. We'll move on to stocks and the Fed. He says, this is from FastBoom993. He asks, how will the looming recession affect the BTC rally for 2022 and 2023? This is assuming there will be a recession by that time. So how would you answer this question?
Yes, I am in the camp that later this year, early 2023, we do enter a recession. I think the Fed, again, is being, as much as I was a fan of them never printing as much money, I think they waited too long to kind of start pulling back on it at this stage. And now honestly, they're going too fast. They're playing catch up. So that likely will push us into a recession. You add in high oil prices and inflation, and it's already hurting the consumer all over the world. But basically what I think is you get into a recession. Yes, that's going to put a little pressure on Bitcoin, but my guess is Bitcoin is already near the lows at that point, meaning it's 12-ish thousand or lower. And so there's minimal downside at that point. Could it go to 6? Sure. But when you're at 65,000 and it drops from $6,000, it's very, very small percentage wise. It'll be bigger down here. But again, my at least for what I'm doing, and I can only speak to what I'm doing, is I'm looking at the bigger picture now as we get in these lower levels to where it will be in 3, 5, 10 years out. And again, I've talked about how the chart, and this has played out perfectly, David, and you guys know, we compared the Amazon chart in the .com bubble to the Bitcoin chart in the last year, and they are almost identical. And we know the .com bubble burst. I think that's what's happening with crypto here. And remember, Amazon went from about $112 to about $6. So that's about a 90+% drop, maybe close to 95. Bitcoin maybe does that. If it does that, think about where Amazon went afterwards. It went all the way from $6 to about $3,000 to $4,000 a share. If you map that out on Bitcoin, there is massive, massive upside as it gains traction as kind of a safety gold type digital play.
Okay. Final question on cryptos today. Crypto Bagger asks, hi, David, please ask, do you think there will be a soft landing or hard landing by Feds? And approximately when will altcoins decouple from BTC? Also, when do you think altcoins will enter bull territory, and how long do you think this bear market will last? So that's 3 questions here. You've already answered the soft landing part, more or less. Let's touch on the second part of the question. Approximately when will altcoins decouple from BTC?
Wow. Oh, man. So I'm not 100% sure that. So I think that the key is going to be is right now, alts are still in favor. People still have faith in them. I do decouple Ethereum from other altcoins and even stuff like Cardano and Polkadot. Basically, the top 20, I look at the ones that maybe they can survive this. Everything else, I would say they will decouple very, very soon if they already haven't, and they likely won't recover when Bitcoin bounces enough, right? So when Bitcoin really starts to become that safer asset that kind of is inflationary in terms of protecting against inflation, I do think that the top 20 may survive and may thrive. But I would definitely be very careful about anything else because, again, folks, you have to look at these as use case. When lots of money's in the system, people will pump money into these things. They're not even going to give a second thought. Once you get in a bear market, it's really what's valuable and what's not. And big money is what's going to drive crypto in the future. That is absolutely going to be it. And they're going to look for use case that has real use case. Ethereum has use case. Bitcoin has the digital gold. It's really the only one talked about like that. Some of these others have good basis as well for use case. A lot of them don't have that. So be very, very careful with most of the alts.
Let's finish there on the crypto side. Let's touch on stocks now, and then we can wrap up with gold right after this. Stocks, you said that the stock market decline that we've seen isn't going to see a recovery until several years later. I think those were your words. Now, I wonder what you're basing this on, Gareth, because if you take a look at the past bear markets that we've had or major market correction, let's go back to 2 years ago during COVID, then to 2008, then to the tech bubble bust of 2001, 1991, 1987. All of these 5 crashes I've talked about were followed by a major, very sharp V-shaped recovery. It was only, I can only think back to the 30s, after 1929, when the S&P 500 decline fell about 80%. It didn't recover until 1950s. That was when the S&P recovered to its pre-depression highs. But we know that the 1930s and the early 40s were marked by a Great Depression. And it wasn't until World War II that the US came out of a Great Depression. So that was only the last time that I can think of that the stock markets in the US flatlined for many, many years. Are you saying that we are entering a similar situation now when we have an economic stagnation that will bring about the stock markets flatlining? Because that's the only scenario that I can think of.
Yeah, so that is kind of what I'm thinking is that, especially if you go the last 20 years since the dot-com collapse, the reason we've recovered so quickly is because of stimulus, right? Every time, especially starting in 2008 and 9, the Federal Reserve printed an unprecedented amount of money, obviously culminating with the COVID collapse in March of 2020. So that's been why this market has been kept on life support for so long. The economy has been kept on life support is because you have this stimulus. It then triggers the retail kind of consumer, right? We always hear about consumer spending, and that's been what's driving this market. So my fear is that with inflation being stubbornly high for a period of time, it's not going to allow the Fed to significantly print. Now, as I said, I still think they're going to start again at some point when when unemployment gets to a certain height. But I don't think they can print to the same magnitude. And that makes me worried that we pulled a lot of the gains forward over the last couple years since March of 2020. And it's going to be kind of this stagnating economy, stagflation, where the market is kind of, you get this 0 to 1% growth in GDP. And without stimulus from the Federal Reserve, there's just no way to get us back to these highs. You're not going to have the earnings growth. You're not even going to have earnings growth, period, to get us back to these levels. So I think it's going to be a long trek here. Things have made a major pivot because of the inflation surging to the upside. And it's going to be a tough market. It's going to be a trader's market going forward for quite some time.
Okay. What are you doing in this market then? If everything's just going to be flat, how are you going to gain alpha?
Yeah. So when I say flat, it means that the market itself will kind of be choppy sideways, but you're going to have mini runs in there and mini collapses, right? So I think the best chart to look at is and this is kind of what I envision, right? If you look at the Hang Seng market, and I'll bring this up on the charts here. If you look at the Hang Seng market, we are actually still hovering at levels that we saw back in 2000 and, really 2009. I mean, the Hang Seng market right now is still at those levels. And if you actually go to the weekly chart here, you can see that technically we are just above the levels we saw at the highs of 2000. So basically for the last 20 years, the Hang Seng has had big pops, big drops, but ultimately it's trading the same area it was 20 years ago. And I think that that's the rotation we're going to see. We're going to start to see Asia take over. We're going to see them starting to have their breakout. The chart on the Hang Seng is actually a bullish chart if it can break the upper trend line around 32,000. And I think that the US then will be mired in this sideways chop for quite some time. But again, in understanding alpha, there's always places to look, right? So you have mini bull markets inside of a longer term sideways channel. And you also have certain sectors. I mean, gold, I still think is a no-brainer. Bitcoin, when it gets down in this lower sub 20,000, starts to look attractive. You'll have certain stocks like automation names as they start to move to a more robotic kind of economy where there's more robots doing jobs and so forth. So there's always going to be a bull market. It just takes a little bit more work than closing your eyes and just throwing a dart at the dartboard to make money.
All right. Moving on to gold, and we'll finish the segment here. Gold, as you know, has been flatlining this year as well. It's very briefly touched the $2,000 an ounce level, but it hasn't sustained that level. So I'm going to start with this viewer question or feedback, whatever you want to call it. This is by Big Shark LLC on my Twitter. He says, "Gold sucks ass. That's not a question, but ask it anyway."
Yes. So I guess my response to that would be gold is green for 2022. It is up on the year. Here we are halfway through the year. If you look at the stock market, S&P down over 20%, NASDAQ down over 30%, Bitcoin down. I mean, I don't even know what Bitcoin's down since the beginning of the year, but it's got to be close to 50% at this point. I will gladly take something that sucks ass if it keeps my money stable or gives me a small gain when all that carnage is going on.
Right. I mean, if gold sucks, what's everything else? Gold levels, what are you projecting for the rest of the year then?
Yeah, I continue to be bullish. We're still holding the breakout here. You guys can see this on my chart here. So again, we had the breakout. We had the beautiful double top here. We've now retraced to the scene of the crime. I think gold is getting that ready for its next vertical move here. And I think by the end of the year, we should be well above 2000. I think I had a $2,300-$2,400 price target by year end. I'm not sure if that's going to hold true, but again, we'll stick with it at this point and we'll kind of revisit it later in the year.
Okay, so just to recap then, last year you had said that gold will be the best performing asset this year. So far, again, you're right. Gold compared to Bitcoin and stocks, that is. I'm assuming you're sticking to that call then, right? We're 6 months in and you're projecting gold to go higher and everything else to go sideways and down.
Yeah, in the race, this horse is far, far in the lead, so I got to stick with it.
Gold is your preferred asset. Final question, Gareth, from Daniel King on my Twitter. Will you marry me, Gareth?
Well, you got to talk to my wife about that one. She might have something to say about that.
All right.
But I appreciate the kind words.
Well, I appreciate you coming on today, even though we're both traveling and doing this remote with me. Much needed by our fans and your fans and the people watching our show. So thank you for giving your insights today, Gareth.
Thank you so much. And you have a ton of fans out there too. We make a great team talking markets.
We do. All right. We'll speak to you again soon when I'm back in the studio in Montreal. And thank you for watching Kitco News. I'm David Lin.